So welcome everyone to today's conversation on purchase order financing for CPG brands. For those who don't know, I'm Jordan Buckner, founder of Food Bevy, which is our online platform to help emerging food and beverage brands grow from the early startup days to scaling your company. One of the most challenging things right now is actually getting the financing and money to grow your business. We're still seeing that VC money is still dried up in this space. Just to time this conversation is mid 2025, unless your brands who are already seeing massive growth or seeing profitability, the money's pretty tight. But there are still ways to actually fund your growth, and so we want to talk through one of those today. So for the conversation, I've invited on Rohit, who is the CEO and co-founder of Bridge, which is a marketplace that actually connects emerging brands with financing options. So instead of going out and having to find all these random financing companies yourself, you're trying to figure out who to trust, which ones have a good track record, and submitting multiple applications. They create basically like a common app for applying for purchase order financing so that you can get everything done in one place. And so it's a huge benefit for brands to participate in. So Rohit, welcome today.
Hey, thanks for having me, Jordan. It's great to meet everyone on the call, and I'm getting hungry just looking at people's different products that they produce, and I'm excited to talk to people about purchase order financing, which is not as exciting as the products that you guys produce, but yeah, it's a huge space, and we're excited to be on with you guys.
Money is always exciting. So Rohit, I know I gave a little over on Bridge, but for those who are new or maybe not as familiar, I'd love for you to give an overview of what purchase order financing is and how it works for CPG brands.
Yeah, absolutely. And this is one of those terms that I feel like finance people have made it more complicated than it is, right? But essentially, it is, hey, once you get an order from a big company or from a big retailer, how do you how do you use that order to get financing to help deliver that order, right? So if you get an order for granola, because I saw someone on the call has granola for a large retailer, how do you buy raw materials that you need for granola? How do you kind of get the packaging that you need? How do you get all the inputs financed? Because we all know on the phone, you're only going to get paid after you deliver that product and even 60 to 90 days after you deliver that. So how do you kind of bridge that gap? One of the name, hence the name of our company, Bridge. And so that's how we're trying to help business owners. But that's what purchase order financing is. The other thing I'll just mention is it's called by different things. So some people will call it inventory financing. Some people will call it, just working capital financing or asset-based financing. But for this cohort, purchase order financing is probably the most relevant because you are trying to sell through retailers.
So I know there's different things like there's in terms of like the financing world, there's lines of credit, there's factoring, there's purchase order financing, there's all these different things. So where does kind of purchase order fit in compared to some of those other financing options?
Yeah, great question. So a lot of options, I kind of bucket them into two segments, right? So there's options that will look back at your revenue that you have earned in the past or your profit and give you financing based on that. That could be a traditional bank line of credit, which is a great credit product, or it could be something that we're all a little more scared of and is a little more dangerous, like merchant cash advance, where they'll look back, and some of the fintechs call it revenue-based financing now, where they're looking back at your financials and saying, this is how much I can give you because I expect you will make that money. That's kind of one segment. The other segment is once you've delivered your products to a retailer, they say, yep, I've seen it. I'm going to put it on my shelf. They stamp your invoice. You can get invoice factoring or, just dynamic discounting or supply chain, which is all on the other side of the segment. Purchase order financing is basically, and I would say it's a good way to replace some of the high cost MCA type of debt, is to take on financing once you have a contract or an order or an actual purchase order from a retailer, get that financed, and then get that refinanced out or kind of paid off when you have invoice financing or dynamic discounting or something of that sort.
Yeah, and that makes sense because I know a lot of times if brands are starting off or even when they're growing, if you get a national purchase order from a large chain, that can be a significant increase in the business and the products that you have to manufacture, right? It can be 5, 10, 50 times maybe what you were doing before, and you have to come up with the money to do that. But as you were just mentioning, right, like a lot of these times you're getting paid out months in advance, or you can't get a purchase order kind of months before you deliver, and then you have to wait months after that to actually get paid. So that stretch can be 3, 6, 9 months sometimes, maybe even longer. And you need that cash up front usually to purchase inventory and have all the support um, for like your launch. And I'm kind of curious along with that, whether you're able to use the proceeds from the purchase order financing, does it strictly go into like purchasing your inventory? Can you use it for other goods? How does that work?
Yeah, it's a mix. Mostly it is for actual products, right? So you can't really say, hey, I'm going to pay my salary with it, unfortunately. But many purchase order lenders will add 10 or 20% for general working capital. So that could be, hey, look, the granola example, like, yes, I can buy the boxes to ship them in, and I can buy the actual ingredients and I can make the granola, but I got to have a human being that actually helps do some of that. And so I've got to pay that person as well. And so there are times when you can kind of use some of that working capital to pay that employee or a third party to help you do that. So it's a mix of raw materials and kind of resources, but really focus a lot more on the raw materials versus salaries.
Okay, that makes a lot of sense. And then I like the kind of spectrum that you gave before, from the lines of credit and kind of term loan spectrum to more like inventory or the invoice factoring. But how does it work in terms of like interest rates on these types of financing? I know it's going to vary, but is it usually more expensive than one or less expensive than other when it comes into the interest rates?
Yeah, I think the way to think about it is, if you look at just traditional revenue-based merchant cash advance type of financing, that's pretty expensive, right? I think the rates go 40, 50%. Sometimes people think I'm crazy when I say that. But if you actually look at factor rates where they'll say, hey, I'll take 1.4 times your revenue, like on a percentage basis, that's 50% even higher at times, right? From an interest rate perspective. So that's very expensive. Unless you really have to, I'd stay away from that stuff. On the other end of the spectrum, if you go to your retailer, many retailers have a program that they say, hey, I said I'd pay you your invoice in 60 days, but I'm happy to pay it to you in 2 days, but I will pay you 98%. So you're basically paying 2% on that, right? So that's the kind of range. On one, you're paying kind of 2% per maybe 60 days, so 1% a month. On the other, you're paying like 40, 50 or more percent. Purchase order financing is very well in between that, closer to that 1 to 2% a month versus the 40, 50%, right? So purchase order financing is really in that it's between 1 to 1.5, sometimes 2% per month. You usually need that type of financing for 60 days. So I think of it as, if your gross margin is 50%, you're going to pay a part of that gross margin to get that product manufactured, and that's the cost of purchase order financing.
Totally makes sense. We have one question that came in from Jessica. What are some common reasons why someone would perhaps not be approved for PO financing?
Yeah, I think there's three reasons that we often hear, right? One, it's your first purchase order, right? That's hard for a company to finance because they don't know your track record. They don't know that when you actually deliver this product, if anyone's going to actually use it, are you going to get it all returned? There's a lot of operational risk that they're taking. So that's kind of one reason, right? It's your first order. It's really hard to get that purchase order financed. By your second, third, fourth, fifth, it's much easier. Number two, we hear a lot about how sometimes the math just doesn't work, right? And it's a good sign when a lender is kind of doing that math for you and telling you. So at times people will be paying way more than they're being able to make net of dilution and things of that sort, right? At that time, the lender will say, guys, I'm looking at your margins and I don't think you can actually pay us back with this. And so that's kind of more of a math doesn't work. Number three is, at times borrowers are overlevered, right? If you have taken on a bunch of other debt, then I think the purchase order finance company says, look, I'm looking at this, but you have so much interest to pay. You have so much other capital to service. I don't know where we would fit into this equation. And we'd have to talk to all these lenders, and it's not kind of worth all of that time. right? So those are the three reasons we commonly hear. That said, one of the things we do is if you lender, you go through the process. It takes 3 weeks. They say no, you've now wasted 3 weeks. You got to go to lender two. So one of the things we do is we have kind of every purchase order lender in America on our platform, right? And so we're able to screen and kind of judge for ourselves if this is something that would work. And if it is something that would work, we also know who to go to make it work because some lenders will be, we like food products. Others will say, oh, I don't want to do food products or whatever, right? So we're able to kind of screen that for the borrower so that you don't have to go to 100 different people.
Awesome, that makes sense. Um, I'd love to maybe with that get into, I know you put together a couple of slides to kind of walk through what that process looks like, because I think it is important to think both in terms of like, what does it take to apply for purchase order financing, and then what does that timeline look like so you can start planning on that for your business.
Yeah, and Jordan, keep me honest. Let me know if you can actually see the slides.
Yep, you're
But
good. We can see
all
it.
right, so I made the technology work. Great. All right, so I think it's a complex slide at the top, but I'll try and walk through it, right? So essentially, if you're going to a big brand, right, you're one of the big kind of retailers in America, and you're saying, I have this amazing product, I want to put it on your shelf. You'll talk to a buyer. That buyer may say, yeah, this is actually amazing. We'd love to have this on our shelf. They might give you an interest email. Eventually, they'll say, hey, this is what one of our contracts looks like. And at some point, they'll say, look, we're going to put this in 50 stores or 100 stores. And this is what we think we forecast you'll need, right? So if you manufacture bottles of soda, we'll need 500,000 bottles of soda for all of these stores that we're going to put you in. Depending on your product, from then, and we call that kind of day zero, right? So that's the day that X retailer wants you in their stores and they're going to give you an order. From that day, it could be anything between 30 days or 120 days later where you actually get something that says a purchase order. If you make food products, often you'll get a purchase order like 2 weeks before. So they're kind of relying on that forecast in advance and they're saying, hey, starting in July, I want this product, but every week I'll send you a purchase order for like 1,000 bottles. And I just want you to keep kind of serving that purchase order. So that's why you see that range there. Then you actually deliver the goods, right? So now they have said, hey, July 15th, we want these bottles in this warehouse. It's delivered. Great. It usually takes them 5, 10 days to approve that invoice. So you say, hey, I want, $20,000 for those 10,000 bottles that I delivered. They'll say, yes, you did deliver them. That makes sense. Approved invoice. And then they'll pay you anywhere from 30 to 60 days after that. And kind of like you'll hear a lot of finance people talk about, well, this is the working capital cycle of a business, right? So, and the cycle really is when do you have to spend money to make your product versus when do you get paid back for the money you spent along with the profit that you've made, right? And so the way we think about it is, look, at this T0, right, when you get this advance is when you need to spend the money, right? So you got to pay for inventory, you got to pay for salaries, you got to pay for all of that stuff. Maybe you get 20, 30-day terms, but you're not going to get 120-day terms from your goods manufacturers, right? And then this is when you get paid on the invoice. And so that entire period in between is when suppliers, which are you guys, brands, you have a need for capital, right? That's kind of the time when you've got that need. Um, and then, most financing solutions offered by the brands start over here. So if you think about invoice financing or supply chain programs or whatever that is, that starts at day 100. So from day zero to day 100, which, not, if you put it into months, that's 3 or 4 months where you need some capital to get stuff done. And that's kind of the need we think we're trying to address with purchase order financing. So, any questions on that, shoot it into the chat. Happy to answer them. I know it's a busy slide with a lot of numbers and arrows. And so happy to kind of go through if people have questions on that.
No, I think that's really helpful. And then I guess one thing on there that might come up is when do you have to pay back that kind of capital? Or I guess maybe in the beginning, like when should you be thinking about applying um for purchase order financing?
Yeah, that's a great question. I would say the best time to think about it is somewhere between getting an interest and a contract, right? Like obviously, people want to act on things that you've actually got in hand, right? So if you say, "Hey, I just had a great meeting with this retailer, they think they might be interested," no one can lend you money based on that. But if you say, "Hey, I've had this great meeting a few times, and then after that, I've gotten this contract that's coming in the next week," that's the right time to have the conversation because this is not immediate. This doesn't take 24 hours to get. It takes 2 to 3 weeks to set up. And so I would start that conversation then, so that when you get that order, you're not scrambling at that time to find because all of a sudden we've noticed this happens. It'll get to the time when you get that order, and now every day will feel like, a race against time to get that delivered. And so start earlier.
Yeah, that makes a lot of sense. And I can tell you that from buyer meetings that I've been in before, buyers will usually ask, depending on your size, like, all right, like how confident are you that you can like fulfill this order because they don't want to give an order to a newer brand and risk not being able to deliver on time or late. They have certain reset periods that they need to hit, and knowing that lots of things can go wrong and getting the money to actually fund everything can be um, a big delay.
Yeah, absolutely.
Okay, that makes a lot of sense. And then so once you get that purchase order, is at that point that you actually can the lender, if you say find one that has good interest, you can actually they'll like process it and make that payment. I guess I'm curious, like once you're like, all right, got the purchase order, how long does it usually take to get the actual money
Yeah, I mean, once you're
typically?
all set up, you'll get the purchase order, and the lender will pay your manufacturer directly. So let's say you're manufacturing something even overseas, they'll make that payment or they'll give that letter of credit directly to that manufacturer within their payment terms, right? So if they're giving you 20 days or 30 days, they'll utilize that and on day 19 they'll send the payment. So all of that the purchase order lender will do for you directly. Your job is really to obviously you have to maintain the relationship with your manufacturers and things of that sort.
Got it. So that makes sense too. So they're not just giving you the brand a lump of cash to spend, they're paying that money out directly.
Right. That's just how that helps them mitigate their risk a little bit, right? Where they're sending it for the things that you need. So if you need, you're manufacturing a glass bottle and you need the bottle to be manufactured by someone, and then you need to buy the metal cups from somewhere else and put those together, they'll pay those individually so that you can then, you don't have to do that. You don't have to pay the wire fees and all of that stuff. Like they will do that.
Perfect. And then Gavin asks, is it possible to get financing for a portion of the PO but not the entirety?
Yes, absolutely. So they will only lend you the money that you need. Some of them will have a minimum, right? They don't want to do a bunch of work and then you only use like part of the facility. But yes, I think if you say, look, I've got 7 POs and I only want to get these three financed, not the other four, absolutely.
Okay, awesome. And then is there a price like a dollar range that they typically like to finance that's not too small or too big?
Yeah. We think about it. I think at the bottom of the range, you want to kind of make sure you've got $100,000 or more of purchase orders. Now, that doesn't have to be all in one purchase order. It could be over two or three, right? But any sort of agreement they'll sign with you will say like it'll be at least 100 to 250,000 at the minimum in terms of the amount of cost you need. Anything below that is probably too small for most purchase order lenders.
Okay, that makes sense. And I'm also curious if lenders are paying for the materials directly, how do they get their fee? Are then you paying like a certain amount to them directly then for
Yeah,
I don't
so
know.
essentially, when they pay your lenders, when they pay your manufacturers, it's your loan now, right? They've paid you, or they've paid the manufacturer on your behalf. When you get paid back by the invoice, essentially, that's the time that they'll get paid. So let's say, a simple example, right? It's $100 purchase order you got, right? Off that purchase order, $50 are your cost and $50 your profit. When you go to the lender and say, "Hey, I've got this purchase order," they will finance $50 of the cost. When you get paid the $100 invoice by the retailer, they will keep $4 or $3. That will go to the lender, and the rest of it will come to you, right? So you'll get $46 in that example because that 50 will have gone to pay back the manufacturer, and then the other four is gone for their interest, and then you get the 46 profit in your account.
Got it. Okay. That's all really helpful. Um, cool. So I love all the questions. Gavin, thanks for that. If there's other questions throughout, drop in the chat. As I mentioned, we will have some time for Q&A at the end, but want to get those questions answered as soon as you have them. Rohit, I know you have a couple other slides. You want to walk through those?
Yeah, absolutely. One of the things that I wanted to talk about, and this kind of plays a little bit to what you were talking about earlier, Jordan, is just like what are the fees? Like, what are the characteristics? So, a pre-shipment option is often, people talk about MCA debt, which I think is expensive and kind of oftentimes doesn't help a business, right? But this is, debt that's based on historical revenue. It could be unsecured. It's very fast, right? I often tell people like, if someone's saying that they're going to give you money in 24 hours, you might regret it in 26 hours because it's too fast. They're not doing their diligence. That means they're just charging you a huge rate, right? They're charging you a huge interest rate, of course. It's expensive, which limits your ability to do anything else because you're constantly having to do new orders to pay back the old ones. Um, and why do people pick it? It's because it's fast turnaround. Like if you need the money and you've got this big contract with a big retailer and you got to pay for those goods, that's what you do. So I totally get it. If people on the phone have used MCA, if I was running a food beverage business and I needed to pay my invoice, pay my manufacturers, I would use it too. Um, and then on the other end of the spectrum, right, far cheaper is kind of this invoice financing, which a lot of brands offer themselves, which is really early payment on invoices, right? Where the risk isn't your risk, it's the risk of that big retailer actually making that payment. Once they've stamped the invoice, they're going to make the payment, so it's low risk. But they'll charge you, at times it could be pretty quick for smaller amounts, but it could also take a few weeks to get that set up. There's usually minimum guarantees. They want to make sure that you're not just uh, fact a $10 invoice. They want to factor a certain amount. It's easy. It's a low rate, but it only serves that purpose at the end, right? And I think to kind of come back to what you were talking about in terms of like where does purchase order financing come in? It's that stuff in the middle that we think of as purchase order financing, right? And people call it production financing, working capital, inventory financing, but like it's everything in the middle that is purchase order financing, right? And so that's kind of the options that people have across early and late, and so that and everything in the middle is kind of what we've got that we want to try and create this market for, right? And that we've got a bunch of lenders for.
Awesome.
Yeah, last slide. I don't think I think everyone. This is like a little marketing slide, I guess. But like, what we've built really is the technology with, for some reason, with two Ys, or to kind of do all of this, right? And so, how do we make sure that we can tell you if you're going to get your purchase order financed? How do we make sure that we can tell you what lenders are out there? A lot of times we've seen just so people know, there's 10,000 different lenders in America, right? How do you know you're going to the right one? We get that question all the time. And so what we've done is we built a technology to be able to analyze your purchase orders, analyze your invoices, and based on that, tell you, A, will you qualify? B, how much do we think you'll qualify for? And then C, who are the right lenders that we work with that will be able to get you that loan? And then, by the way, we help you get that as well. It's not like we say, hey, this is the best options. Good luck. Will help you get that financing at the end. And so that's kind of the platform that we have. And you can visit bridgemarketplace.com to see the options and kind of what we do there.
Awesome. And then Rohit, I think one thing that's always really critical, how much does it cost to use an application through submit an application through Bridge?
Yeah, it's really expensive. It's zero. It's your cost is your time, right? And so we have partnerships with our lenders. And so when we're not a nonprofit, we do make money, especially for any of my investors on the phone. We make money when you actually get that purchase order, right? So lenders pay us a certain fee to help them underwrite it. service it, get the deal to them, all of that stuff, right? That said, our fee is kind of built in, and we're trying to create a competitive marketplace. So you get a bunch of options. You pick the best one for yourself, and we kind of get paid in the background.
Yeah, I mean that's one of the things I really liked about Bridge is that you're almost like lender agnostic. So it's not about positioning you with one specific one because you just have relationships with all of them. So you're trying to place the best fit between a company and a lender, and there's multiple options. The best fit for brand, one company won't be the same for someone else, and so it's really being that matchmaker in between.
Yeah, I totally agree with you. I think that, we always tell people, hey, do you go buy the first car that you've ever seen? Probably not, right? You want to shop. You want to get the best deal. You want to make sure that it's the right financing for your need, right? And so that's what we're able to do.
Awesome. I love that. At this point, I mean, we have a little bit of time. I want to open it up to questions from the audience. We're going to do this in two ways. You can either just drop a question in the chat, or if it's a little bit more complicated, you can use the question emoji, or just say, like, I have a question in the chat. I'll keep an eye on you, and then I'll invite you to come up, and then you can ask that question directly to Rohit. So we welcome any and all questions. If you're like, hey, what was that term you mentioned earlier? Or like, here's my situation. Would I qualify or win? Definitely come up more questions, the better. We have about 10 to 30 minutes of questions to be able to answer for you. So first question that's in the chat, what documents do I need to have ready to apply for PO financing?
That's a great question, just because it's hard to figure out, what do I even need, right? And sometimes people try and kill you with paper cuts with the number of documents they need. We've actually created a checklist. So, email us afterwards, or write it in the chat, and we'll get your email and we'll send you that checklist, and reach out and just provide that entire checklist of documents that you need. But it's pretty standard, and it depends a little bit on the type of situation you're in, but we've created these checklists for you so that you know going in. And so just comment or something on the chat, and we'll make sure we get that checklist to you guys.
Awesome. Any other questions that we have from our listeners?
Rob, we'll send it over.
Jessica asks, are there any industries you don't work with? And I guess
No,
one, do you do any work with like cannabis or CBD brands?
we do have a few lenders that do, which is actually interesting. It's new. The advantage of Bridge is that we kind of work with lenders across the board. So if it's out there, we'll find it. Right. I think CBD brands are definitely harder to get financing for, but we have seen one or two lenders that do that. And so we're able to do that.
Okay, that's awesome. Then we also have a question from Gavin. What's the longest term? Example, a year's worth of POs. Is it paid based on the individual PO? So like when that PO gets paid, you pay it back. So you might have three or four of these financings out there rolling.
Yes. And so you kind of have a facility. So they will basically ask you for a projection of how many POs you'll plan to have in that year, right? So Gavin, you'll say, I have $750,000 of POs over the rest of the year. Great. Based on that, they will set up a facility. And then they'll say, okay, each individual PO can be smaller, but the facility is about 700,000 or whatever, right? So at most you can finance 750,000, $700,000 of POs, but each individual PO can be much smaller, right? So Gavin, in your example, you might struggle to hit 100, you could get to 50,000, 75,000. But as long as on the aggregate across the year, you've got enough, then it still makes it worth their while for the borrower, for the lender. Certain purchase orders kind of work as you'll get purchase orders like weekly, especially for food products. And so that might be like a really small purchase order, but it's weekly. And so over the month, you could have a $400,000 PO, but each PO is only 100,000, or even 25,000 each PO, and the total is 100. The best part of, I think, PO financing is that it scales with you, right? So often what happens with retailers is they'll test you in 3, 4, 10 different stores. And then they'll say, you know what, you're selling really well. We're going to put you in 500 stores. And then we're going to put you in 1,000 stores, and then 2,000 stores, right? And once you've got that facility set up, At the smaller end, that's one less thing you have to worry about because, going from 50 to 500 or 1,000 stores, there's so much other stuff that you'll have to worry about as a founder or as a production manager or CEO of a company that this shouldn't be one of the things you worry about, right? Financing should be something that you've got taken care of. And look, I always loved saying this. I envy and I am all in awe of small business owners across this country because they literally have to wear 10,000 hats and they have to do 10,000 things at one time. And the only thing my team and I are trying to do is take one thing off your plate, which is financing.
Yeah, I love that. Awesome. I know you have a bunch of people put in your email address for the checklist. We'll also send it out in the recap as well, so you can get that to everyone's email. Um, One thing I was curious about is I know you work across different industries. How many lenders do you see working with kind of food and beverage brands? Because I know, there is always that added risk of not just
Yeah.
the inventory, but expiring inventory, and sometimes retailers can have issues in paying, but with POs or making changes. So what does that look like in terms of the availability of lenders and the aptitude for kind of investing in food?
Yeah, it's fewer than it is for like water bottles or something that's non-perishable,
Yeah.
but they exist. And we've got lenders on our platform that do that. And I don't have an exact number. The thing that's always interesting to us is that people don't know enough about purchase order financing. And there aren't, you know, 10,000 purchase order finance lenders. There's actually only like 20, 25 purchase order lenders that specialize in purchase order financing. A lot of people say they do it, but they don't, right? And so we've got all of the lenders we think that do purchase order financing in America on our platform. So, you know, our pitch to you is if the solution exists, we've got it. And if it doesn't, it's a one-stop shop to find out that it doesn't exist, right? You come to us, we'll tell you, hey, we just don't think it exists. We don't think this is financeable, and right? And then you can try and figure out if you want to raise equity or something else for it.
Awesome. That's helpful. Any other questions that we have from the audience? Like I mentioned as well, if you have something that's a little bit longer or you want to talk through a specific situation or question, we can also invite you up to ask directly. While we're waiting on that, there's always been this continuous conversation with food brands selling through distributors, right? So a lot of food brands will sell through UNFI or KT and these distributors to get to a retailer. So like when I was selling to Albertsons stores, my PO wasn't from Albertsons. It was actually through KT, which is their distributor. Um, does purchase order financing work the same there with
Yeah.
the big caveat that there's this issue of lots of things being baked into that payment. So maybe the invoice is for $100,000, but after chargebacks, marketing, all this other stuff, a brand might only get paid $60,000 in cash for that $100,000 invoice. And I'm kind of
Yeah.
curious how lenders see that.
I think that's it's hard to finance the first purchase order. But if you've done it before, they'll just look at what you've gotten paid in the past and use that as a judgment for the future,
Okay.
right? And so definitely possible. And I think if you just look at what they've done in the past, that will determine what they can do in the future. But yes, that they people work with distributors all the time.
Okay. And Hector has a question. Do lenders work with importers?
Absolutely. And so they work like if you're importing a bunch of your raw materials or even finished product from overseas, this is a great product because they will provide letters of credit and at times even deposits for companies internationally. One of the deals that we did recently, it was like a manufacturer in China and Vietnam, that was actually producing the goods. And the retailer was based in the US, and they did the LCs directly for those manufacturers in China and Vietnam.
Awesome. That's super helpful. Um, Perfect. Other questions that people have? Rohit, are there any common other like questions or roadblocks that come up when you're working with brands when they're getting financing?
Yeah, I think, we often, I think the one thing that we've seen is people not coming at the right time, right? If you need money tomorrow morning, it's often too late to ask today. And so just getting ahead of it is the largest challenge. We offer ourselves as a resource. If you just want to get on the call, if you want to ask us a question, if you want to talk your situation through, we're more than happy to help, right? We've got a whole team that's based across the US that is happy to just get on the phone. These guys are experts in purchase order financing and working capital financing, and basically just give you any of the information that you need, and advise you. I think the largest challenge I've seen is when someone comes to us and says, "Hey, I've got a payment due next week. What can you do?" It's hard. It's hard to kind of help that because we want to, and we're like beating ourselves up because if that person would just come to us 4 weeks before, we would have been able to help. But if it's next week, then now we're going to look for, hey, can we delay that some way and figure out some other source of capital that can bridge that gap?
Yeah, that makes a lot of sense. I'm kind of curious too. I know you have the application through Bridge that you created. Would you be able to give like an overview of like what the different components of the application are? I know we are going to send out the document checklist, but just kind of a sense of like, all right, if I am going to apply, is it something I need? Is going to take like an hour to walk through, or kind of what does that look like?
Yeah, it takes 10 minutes. Really, really the application, it starts with like, what do you need? Why do you need it? And this is all kind of question by question. It's pretty easy on bridgemarketplace.com to use that. It asks you a little bit about your historical financials. Who are you selling to? Do you have the order? Are you going to get the order? What is the amount that you're planning to sell? And it kind of guides you through the questions. So there's no complicated, like tough math questions or anything. It just asks you a little bit about your business. We think it takes 10 minutes to complete. We've seen people do it faster. We've also seen people say, oh, I need to ask my accountant on that. And it saves your data. You can come back to it, tomorrow morning after you have those numbers, fill it in. Once you submit, you can always add documents later from that document checklist, right? Or even if you haven't got the documents, you can have a call with our team and say, hey, do I really need this? I have this, I don't have that. But it's pretty quick. And once you've done that portion, then we can tell you what else you need for us to take that deal and evaluate it. And once we've done our assessment, again, all of this is very quick. It takes a few hours to kind of do all of these things. Once we've done that, then we can very quickly tell you if this is something that's going to work and what kind of rates we think we're going to be able to get for you.
Perfect. I think that's really great. Awesome. So I think those are all the questions that we had. If anyone had any last minute questions, would love for you to just drop those in the chat or come on up. We can answer those. Otherwise, what we'll do is we'll be sending out the recording of this conversation in the next day or so so that you can review and share. And then we'll also put the link in the chat here and pull that up so that you can go through. I always recommend everyone fill out the application so that you know what it takes to do so, and you can start having those conversations. And then that way you can see, all right, what opportunities exist, and you can use that information as you're going into these buyer meetings or pitches to know that you have the support of getting financing for these, which when, even before you need it. I guess Rohit, one other question that came to mind. I know you're focused on purchase order financing. Do you connect brands with any other type of financing too?
Yeah, look, our focus is working capital, purchase order, in accounts receivable, stuff like that, right? But we can also do equipment financing. We can also do just general lines of credit. We also do commercial real estate loans if people are interested. We have another does that. But yeah, I think the easiest way is to ask, and you go through that flow on the platform, and you'll be able to tell what all we do and we don't do. And so, if it should take 20 seconds to figure out if what your exact need is being able to met by our platform.
Perfect. Well, Rohit, thanks so much for being on and talking about this today. I know there's a huge opportunity for brands out here, and so I want to make sure that they have the right resources and financing they need to grow their business. So thanks for sharing everything today.
Yeah, absolutely. Thanks for having me on, Jordan, and thank you all for joining. I know you guys have 10,000 things to do, but it's always so exciting to watch people who are interested in that business and kind of want to grow, right, using capital, we're here to help. We are a resource. Anything we can do to help, we're here for it. The goal of our platform was to really help small and medium-sized businesses get access to capital through the hundreds of lenders that we've got, through the technology that we've built. And so reach out and thank you again for your time. And thank you, Jordan, for all the amazing work you're doing getting this information to these brands.
Of course. Thanks so much, everyone. Have a great week.